if there's been anything that's come out of DeFi, it's definitely been stablecoins. If you're going to put an ecosystem around that of trading and of banking and of lending and of borrowing, it's going to be around stablecoins. But that is an existential threat to the current banking system. And that's really where the Fed steps up. That's why I said, why has the Fed approved no charters since Dodd-Frank? Because ultimately, at the end of the day, they're protecting the existing incumbents. And they like the system we have.
Hi, everyone. Welcome to Bits and Bips, exploring how crypto and macro collide one basis point at a time. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End, here with Ahluwalia, Maester of Wealth, leader of Lumida.
Hey, what's going on?
Noelle Acheson, High Seer and keeper of the Crypto is Macro Now newsletter.
Hello, everyone.
We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check onchaincrypto.com/bitsandbips for more disclosures. Today, we are also joined by Jim Bianco, the macro oracle of Bianco Research. Jim, why don't you give us a little bit of a rundown before we dive in on who you are, what you do, and how you are involved in the crypto space at all?
Yeah, thanks, James. Jim Bianco. I am macro president of Bianco Research. Been doing that since the late 1990s. So I cover mainly the fixed income market, a lot of macro kind of themes for our institutional clients. About a year and a half ago, I started an index called the Bianco Research Total Return Index. It's in the total return fixed income space. My partner Wisdom Tree has an ETF that tracks it. WTBN is its symbol. I came to the macro space I came to the crypto space through macro around 2017. I first got interested in Bitcoin when I was blown away that the price got all the way to $1,000. I couldn't believe how high the price was back then, and have been playing in the space in and out ever since. As a macro TradFi guy, I'll piss off the maxis to get started right away. I am more kind of aligned with more of the DeFi protocols and the DeFi aspect of what the crypto space brings. So I am very, sympathetic to Ethereum, although it has not been performing very well lately. And I am sympathetic to things like Solana and what it's trying to do as well. And in addition to just being, a fan of Bitcoin. So that's kind of the short course of who I am.
I remember, Jim, back in the day, it was about 2017, it must have been, I was working at CoinDesk at the time, and you were the first macro analyst that I followed, and I followed many, but especially you. You were the first to start tweeting favorably about DeFi. You were the first to start talking about DeFi. And this was such a shock for all of us deep in the crypto weeds that someone of your reputation and renown was speaking favorably of DeFi, that we were even wondering maybe his account's been hacked. Maybe it's not really him.
Well, my account has been hacked in the past, and there is at least one meme coin that somebody hacked my account and tried to rip people off with. Unfortunately, that was a fail. But no, I really, I think that I looked at crypto from the disruptive standpoint, kind of like Uber to the taxis or the internet to newspapers or Amazon to retailing. And I was thinking crypto is going to do this to financial services. And so when, DeFi, especially DeFi summer in 2020, when it really started to go, and I really started to get into the weeds with some of the OG protocols on the Ethereum network, like Balancer and Curve and Aave, and Uniswap. And I really started to like what I was seeing there. And it was really, Nexus, looking at some of the, insurance aspects of it, that this was potentially going to be, or still is, a whole new financial system that could be sprouting up from the crypto space. And I might add, I've often argued that the world kind of needs it. Now, when I say that, maybe we don't need it in the United States because we're, the alpha of the entire financial system, and we've got rule of law, and we've got a lot of regulations, and we've got broadly based access to the banking system. There's not many unbanked people in the United States. I know there are some, but in the third world, through Asia, through Africa, through the Middle East, they are stuck with either shaky currencies run by irresponsible governments, way more than our government is irresponsible, and unsafe financial systems, either the banking system or the brokerage systems or the money transfer systems. And that's where I thought DeFi could really make a big difference. A lot of people agree. It's just that it's 5 years on, and we're not really seeing a whole lot of inroads into that space. I haven't given up on it. I just thought we'd be a little further along after 5 years after DeFi summer than we actually are.
Yeah, I mean, that is the critics' number one claim. I would say there's some sparks of brilliance that could come out of this, but really the only use case, as far as I'm concerned, is stablecoins that's really truly come out of this, and digital store of value, you could argue.
So arguably we could have been further along had FTX not happened.
Yeah, that was a real blow. That and Terra, Luna Terra, also was a real blow to the system as well.
Set us back years, but time to start thinking about catching up, perhaps.
Yeah. All right. Let's get into what is the topic du jour. Today was the day so we're recording this on Monday, January 27th. Everyone basically over the weekend, and particularly into today, was looking at DeepSeek's AI. Basically, they released an AI, and you had the NASDAQ down over 3%, the S&P 500 down 1.5%. You had Mark Andreessen saying DeepSeek R1, which was released. It was released like a week ago. I think a week ago today was when R1 was released, and people are up in arms about how much it actually cost and all these different things. But what it really did is we had almost $600 billion wiped off the valuation of NVIDIA in one day, which is the most that any company has lost in a single day ever.
More than the annual GDP of Norway.
Yeah, there you go. The numbers are kind of insane. I guess I'll turn it over to you, Ram. You're an AI, you're an NVIDIA believer. What are your thoughts here? How are you looking at this? And let's dive in.
So there's the DeepSeek story, then there's the kind of market positioning around data center overall, right? So the DeepSeek actually came out as a story about 2 weeks ago. I interviewed someone about DeepSeek in my podcast, Michael Preck, who is a contemporary of Mary Meeker and Henry Blodgett, internet analyst. He walked us through it. So it takes time for the market to process this. What happened, especially on Twitter over the last 3 days, was this hyper-frenetic kind of fury around DeepSeek, because allegedly it took $6 million to get this training run done and create a model that is comparable or better than OpenAI. And one of the greatest delicious ironies of this is that the DeepSeek model is open source. You can read the white paper, and OpenAI model is closed source. And so here you have this OpenAI contrast in China. They did it for $6 million. Now, that's not the total cost. They had other training runs and there's other fixed costs, and they probably have other NVIDIA hoppers in the background and all the rest. Whether it's 6 million or 20 million or even 100 million, it's not that. It doesn't really matter. The return on AI spend that they achieved so dramatically and so quickly by building on top of, by the way, Meta's open source white paper, Meta Llama 3, they published that, was dramatic. It was developed by a China quant fund, essentially like the Jim Simons of China, right? Maybe it's a little bit of exaggeration. It's a quant fund, smart guy, got a team of people. They built this AI competitor, and it's very powerful. You can download on the App Store. It's downloading more than OpenAI. It's got higher download usage. It shows chain of reasoning. If you ask it a question, it'll tell you how it's thinking in real time. So that sent NVIDIA, as well as a data center theme more generally, down, right? NVIDIA was down like 70%. Talon Energy, Vistra, Constellation Energy Group, that's the owners of 3 Mile Island who inked a deal with Microsoft. They're down like 20, 25, 28%. And so in other areas of the data center theme, I think if you take a step back though, last Thursday, I wrote about this on Twitter. I can share the post too. And we're long the data center theme, but last Thursday you had Trump at Davos saying, everybody cut your rates, United States and globally, number one. And you had Project Stargate announcing $500 billion of investment from Microsoft and Oracle and OpenAI. So you had this peak sentiment moment, including China. Everything was rally. Everything was green coming off the wake of Trump's inauguration. So everything was just bulled up. Everyone had all their chip stack in. And, I wrote then on Friday, like, hey, that's a peak sentiment moment. We should take risk off. So I think the market was vulnerable to any negative news. DeepSeek happens to have been the focus point, and that's what's corrected today.
As a DeepSeek expert, because I learned about it on Friday, so I've had now 2.5 days to.
Yeah, you and everybody else on Twitter or X. Yeah.
Right. I'll just come from it from a market standpoint. The Mag 7 stocks are the dominant AI providers right now. They're 34% of the market. And as Ram was saying, if what DeepSeek is presenting to the market is a lower cost, more affordable way to get into this space where you don't have to do like Microsoft and contract to restart 3 Mile Island to power it, you're going to get a lot more competitors, and you're going to get a lot more margin pressure, and the moats that these companies had are going to go down, and it's going to be a lot more people in. So the profitability that you thought they were going to have Friday is being rethought. It's affecting the entire market given their massive size that they have in the market. So I just see it as from a moat, a price pointing, a monopoly standpoint, that this thing is potentially going to chip away at their monopolies, and it's going to allow other players who can't afford to restart a nuclear plant to play with this to maybe start getting into this game. And so that's, I think, the way that the market is viewing it right now.
Jim, I love the pun you made about chipping away at their monopolies. That was very good, worth calling out. As you mentioned, Jim, I see this as really good news for anyone who isn't an NVIDIA shareholder. Obviously, brutal for some of the market, but stepping back, zooming out, good news for pretty much everybody else, because cheaper AI is when we might finally start to see some of the productivity gains that have been dangled in front of us for so long, and any dent in the concentration, the very dangerous concentration that the market had been reaching. I mean, unprecedented levels of concentration, as you pointed out, has got to be good news for overall market health.
I'll just jump in real fast and say I completely agree. One of the benefits of when the internet first came on 25 years ago was precisely because it was decentralized and cheap. Anybody could get into it. Anybody could be sitting in their dorm room and invent a social media thing called Facebook and wind up, blowing up. You did not need $1 zillion to get into this space. So if we are going to decentralize this, Mag 7 lose, the entire planet wins on some kind of scenario like that.
But it was notable that I think, James, you mentioned that 300 new highs in the market, right? So you are seeing that broadening in breadth that's playing out. So, distributed low-cost intelligence benefits everyone else. But I don't think it actually play out that way, because not every player is AI forward, and there'll be winners and losers. And even in the tech space, I think the real loser here is OpenAI. If you're an OpenAI shareholder, you should be terrified, because you got a knockoff competitor that can enter the market and distribute and is beating you in the app store with not a lot of money. But actually, if you look at like Meta, I think they're a beneficiary. They don't necessarily need to spend $50 billion in CapEx. They'll probably spend it anyway because they can't afford to be number one. In fact, the stock was up 2% at some point in the day, closed down in the red. But overall, the market's trying to process the winners and losers here. And I don't think actually it's generally all Mag 7. I think it's mostly OpenAI. And then the real story is like, what about NVIDIA? Well, look, I mean, the hyperscalers, or as Jim, you call them the scalers as of end of 4 p.m. today now, they have committed CapEx budgets. These are 2-year planning cycles. They're not going to slow down. They can't risk not being number one. So, you don't want to be a penny wise and a pound foolish in the race to have, a dominant AI offering. So I think Meta and Google are winners. Microsoft could be a winner, but they already committed to spending $500 billion on Stargate Thursday. Satya Nadella must be like cursing aloud after DeepSeek. He should have divided that by 10, said 50 billion is all you need.
Yeah, I mean, you brought up Satya Nadella. He tweeted out, but basically this was all over Twitter. I joked that I was going to hide the mute. I don't even know how to pronounce it properly, but I'll just say Jevons paradox, which is kind of what Jim was talking about. Like as these things get cheaper, more and more people are going to use them. And like you can see the charts here. Like if it really does get cheaper, significantly cheaper, you can see a lot more people coming in, more competitors, things like that. And this is a meme that I just wanted to share that was somebody put in our shared Google Drive that kind of goes to this topic. But yeah, I mean, overall, that's the way things are looking. And then I also wanted to share this from Gavin Baker, who pointed this out. He said there's a lot of distillation. It's likely they could have trained this without unhindered access to GPT. And he said, as it was pointed out yesterday, kind of funny to restrict access to the leading edge GPUs and not do anything about China's ability to distill leading edge American models. Obviously, defeats the purpose of export restrictions. Why buy the cow when you can get the milk for free? Which basically is saying, like, they probably used a bunch of these leading edge models to train some of the models that DeepSeek is now releasing. And I mean, who knows exactly where it's going to go? I won't pretend to be an AI expert, but it's
two things.
Go ahead.
So DeepSeek is having outage issues now. And get this, because they don't have enough NVIDIA chips. How funny is that? They took out $600 billion in market cap NVIDIA in the last 3 days. So they are facing export controls. But the DeepSeek paper, they had novel innovations. We don't have to get all of it here, but they were introducing reinforcement learning and other techniques that were clever and easier to adopt and improve upon. So the engineers in Jan LeCun's lab at Meta and Google, they're all excited because they can apply the technology immediately.
One thing we should do is step back for a second and think about what the macro response is going to be here. We can probably assume that, yes, there may have been quite a few NVIDIA chips involved. We don't really know how much we can believe the stats that we're hearing from the team about how much it cost and how they did it. But what does the US do now? I don't know if you saw David Sachs's tweet earlier, repeating what he was saying last week in the Oval Office, that we have to win. And now what does that even look like? So that tariffs and sanctions on China, they're not going to work. That's partly why we got here in the first place, and necessity, the mother of invention, and the engineers had to figure out how to do what they wanted to do with what they had. So again, the horse bolting, shutting the door afterwards is not going to be helpful here. So what are they going to do? They're going to incentivize investment. We have a stimulus coming probably. We're going to be not only more funds for more AI development, because the US absolutely has to win. We also have to worry about what might happen should we see any funds implode because of the losses they sustained today. That would also introduce more stimulus into the market once the losses are absorbed.
Do you mean public federal stimulus, or do you mean just like venture capital, or what do you mean by stimulus?
Public federal incentives for either private or public investment in more AI investment from the US. But then should we start to see funds implode, that would be federal stimulus.
With deficits where they are, and with CHIPS Act looking at a form of corporate welfare, I don't see that. I think his comment, love to get everyone else's take, but it seemed to me, he's like, look, the U.S. has to be here to win it. The competition's real, and we're going to make regulation easy to innovate and let the best country win. That's how I read it.
Yeah, definitely.
What does it mean, now that we're on the other side of DeepSeek, what does it mean that the U.S. wins? What does it mean that we have to win? I mean, does it mean that we have to produce a desktop model that anybody could run off of 110 volts? Or does it mean that we have to produce some gigantic hyperscaler data center type of model that does, further intelligence? Or does it mean both? Or does it change what winning means from what we thought it meant the day that Stargate was announced?
Look, I would argue a few things. One is, look, China, first off, they are ahead on battery technology. BYD's ahead. Their EVs are ahead. They're ahead on nuclear. They're behind in almost everything else, by the way. But they are ahead on those angles. But if you have low-cost AI, then edge AI is cheap and efficient. So personal assistant AI, meaning mobile AI, that's your personal assistant that doesn't have to tap the cloud, that's always on. That's one way to win. Another way to win is driverless technology. If you can get this quality AI in a distributed way that's local, right? EVs cannot access the cloud. They've got to be able to work off terrain, off grid, etc. That's a win. So more hardware, Internet of Things, like all that benefits from DeepSeek. So I think the consumer is how you measure the consumer apps. We haven't seen many wins on the consumer app side other than the chatbots. The other would be the military, right? Talking like drone warfare, look at like Anduril. The next generation fighter jet, which is a drone. Like I think those are all the measures of winning.
I agree. We measure measuring winning by usage, I think, Jim, that's where it is heading, because the technology exists and we've been measuring so far how much we're spending on it without actually seeing the productivity gains that everyone's been talking about. And we're only going to see those when it is in use by not all industries, obviously, but certainly more than today. And I think that's where the stimulus comes, incentives for businesses to invest in repurposing their supply chains and repurposing their workforces, even incentives to actually get this in the hands of the user, be they consumer, be they military. Robotics is something that we need to focus on as well. And I think what we're going to see, especially, I'm sure NVIDIA knows that robotics are the next frontier to start winning on. And I'm sure that they already have some new chips on the table, or if not already in production for that, or could even perhaps repurpose some of their existing supply chains for robotics, which is going to be the next war to try and win.
You nailed it. Robotics is a key one. Drones are subset. By the way, after NVIDIA reports earnings, right now their forward P is like 30. Their forward PE will drop to lower. I don't know if James can pull up the math quickly, but their forward PE is going to drop substantially. The S&P is like, what, 20 times now? So, yeah, 24 after today? After today. Yeah, last week it was 24.
Yeah. James, I got a question for you. To put you on the spot a little bit on your day job here, the ETF NVDL, the 2x NVIDIA ETF. Nicole talked about whether or not any funds are going to get squeezed on this. That'd be a good proxy to look at. How did that fare today?
I mean, they got obliterated, but I mean, they did what they're supposed to do. So like those types of issuers that launch those 2x long and 2x inverse single stock ETFs, I mean, they kind of benefit on both sides. The problem is that like if you're an issuer of those, so the one you pointed out was Granite Shares, but you have T-Rex that also launch those. You'd much rather than be like closer in assets. Like NVDL is still a $5 billion product right now. So I mean, the thing is got absolutely slaughtered today.
How about the NAV? Did the NAV really blow out? Because that's really where you wind up screwing everybody, is when it starts to decouple from the underlying.
I didn't see anything that looked like completely out of whack, but we also don't have the NAVs yet for today. So, but so like we'll get the NAVs and we'll see them, but I would expect them to be mostly okay. The one caveat here is that a lot of these products, specifically the NVIDIA ones, they were leaning on options markets rather than just swaps alone. So like there could be some wonky things that happen there where they don't exactly track like one-to-one. But other than that, they seem to have operated the way that you would expect them to operate within reason. They might not have given you exactly 2x. I'm trying to look at exactly what it did, but for the most part, these things are trading vehicles. So if you're using them, I wouldn't be surprised if one of these blows up someday, potentially. But I would have thought it would have been MSTR, the MicroStrategy ones, not the NVIDIA ones.
Right, and I guess the NAV premium discount is important. Is if somebody was using one of these as a hedging tool, and
correct,
they walked in today and said, "Hey, we got this hedge on, and we're all okay," except then the hedge doesn't, do 2x of what the underlying did, and then you're not okay. That's really where the problem could come in.
I would say this: like, one is data center theme is now actually looking attractive. I think it's going to take a few days to settle out. When you get this much volatility, it's good to wait at least 3 days. Key will be Mark Zuckerberg's comments when Meta reports earnings on Wednesday. Then the number 2 customer, NVIDIA. NVIDIA has significant customer concentration in Microsoft and in Meta. And Meta said, look, we're going to spend $50 billion in CapEx. I don't think they're going to change their mind. They're not going to stop. They did stop in 2022 on the metaverse when the market pressured them to, but they've been growing revenue double digit. So, but that is a key driver of NVIDIA sentiment. But like everything is like cheap now. Last week, the move would have been to sell and de-risk. This week, you have a Monday morning gap down retail panic. A lot of retail investors own those names too. And NVIDIA is like down to the 200-day moving average. And quite a few other names are dislocated. So I'm not saying go buy it like tomorrow, but I would say within the next 10 trading days, there will be an excellent opportunity to pick up these names. That's how I'm orienting around this.
I also think it is a combo of like, there's some people that are in this that are up a ton, and we're just like, all right, time to, there are a lot of things we're saying these shares were possibly overbought. There's been a lot of technicians calling for that type of stuff. So I think there's just people out there that are like, we're up a ton on this. Well, let's just take some off the table, and it just compounded. That's the way these things usually work. But I'm sharing a screen here. NVIDIA is down 17% today. The 2x up is up 34, almost 33.8, and then the 2x down is up 33.7. So if one of the things we wrote in our note for our 2025 outlook was like these MicroStrategy inverse and NVIDIA inverse are probably going to pay off at some point in short terms, and here we go. It's happening in the first month of the year.
Pull up KMI or CEG. I want to show you something interesting. Again, this goes back to the data center theme. It's more the NVIDIA story. It's a data center theme. So KMI is Kinder Morgan. It's a midstream pipeline. So midstream's needed to get more energy and push natural gas powered data center. But if you can pull up like a year-to-date or a 1 year chart. So this thing also tanked quite a bit today, right? It's down.
Yeah, it's this one here.
10%, right? So it's down 10%. That's significant, right? It's crushing. Guess what? It's back to pricing on January 1st. And I could tell you a similar story for Constellation Energy and Vistra and Talon Energy. So the late money buyer got hurt. Twitter momentum stocks, animal spirit stocks, retail favorites, and I put uranium in that bucket.
And what about crypto, Bitcoin, for instance?
Crypto below 100. I think I've been fairly consistent around this. I think whales are selling crypto and Bitcoin breaks 100, and animal spirits are down. You see that Twitter momentum's down. I think crypto is going to lag. I mean, you saw the EO announcement. We have a little bit more clarity from last week. They said they'll get input on the national crypto bank, whatever you want to call it. Stockpile. 180 days from now. 180 days is forever in crypto. That's in dog years, a 7-to-1 dog to human years, right? In crypto, it's like 200. It's like vampire ratio to human ratio. No one has patience for that. 180 days?
Well, true, but we can presume they're not selling within those 180 days, which is basically what we want with the stockpile anyway.
That's priced in. That's done now.
Yeah, I agree.
So, well, let's get into this. So you're talking about price action. I mean, Noelle, did you have anything to add on macro markets or equity markets like we were just talking before I move on?
No, just the impact on Bitcoin is a reminder that Bitcoin trades like a risk asset when the mood is risk off, and it trades like a safe haven sometimes when it wants to. It's a confusing asset, and of course, anyone who sees it as a risk asset is going to be selling when they shift their moods. But anyone who sees it as a longer term safe haven is going to be buying on the dips, which is why it didn't dip as much as I would have thought it would, given the sharp shift in sentiment today.
Did you see anything in the spot ETFs today, in the NAVs or in the volumes that could lend some insight here?
No, nothing. There's nothing that like jumped off the screen at me. Like sometimes, honestly, what jumped off was surprising. Like usually in days like this, you typically see, not necessarily Bitcoin specifically, but like if you look at SPY, when things are like, when shit's really hitting the fan, like typically you see volume and trading volume really shoot up. And we're like not even, it barely moved today. I don't know if that was partially because it's a Monday.
That's a better sign. You will keep going till we get that capitulation.
Yeah, the worst of like when things get really, really bad. Like we've seen things where it's like a day or two and a flush out and things don't, but things get really bad. Like think bottom of like 2020 in the COVID. Like that's when SPY is breaking trading volume records, and we were nowhere near that today. So that's what we were looking at. But I'm sharing Arthur Hayes' tweet today. He basically called for 75K. In Bitcoin, he's still bullish by the end of the year. I mean, I saw Tom Lee talking on CNBC and Bloomberg even in the last few weeks saying that he could see a correction down into the 70K range as well before going much higher in years ahead. Ram, this kind of seems to be your case too. Go ahead, Noelle. What were you saying?
Sorry, I'm seeing that number thrown around quite a lot. I imagine it's something to do with the technicals, and I'm not a technical analyst, so I don't follow the reasoning. My question is, what would that do to MicroStrategy should it get down to the 70s?
So I'll throw out that low 70s number. I do track two things. One, kind of the average purchase price from all the ETFs, and it's now in the low 70s. And second of all, Saylor's average purchase price is around $68,000. So if you were to get down into the low 70s, Hayes's forecast, you'd be sitting there and you'd be basically saying, well, at this point, on an average cost basis, Saylor hasn't made you any money, and the collective of the ETFs hasn't produced any net P&L for the collective. Now, of course, if that's an oversold point and the market rallies, then it will start again. But that's really where you could get some kind of a, let's call it a discussion point. Now, all of a sudden, man, we've got nothing to show for this because we've been buying all the way up. And, by the way, that's not unusual for something like that to happen. Famously, probably the most famous hedge fund manager of all time is Julian Robertson. He started the Tiger Fund, and they got all the Tiger Cubs, all the managers that he spun out from that. And what typically happens is you have a good 20-year track record where you're just fantastic, and then everybody notices you, and you get tens of billions of dollars after that. And then the market corrects, and your whole career you end up not making anybody any money.
Well, that's Bell Hoffman in the last half of the 2010s, right? On a dollar basis, he's not really created much value because people are in at the exact wrong times.
And this is the problem that Saylor faces, right? He'll keep buying and buying and buying and buying. And maybe we get to the Tom Lee number one day and we're sitting at $250,000 on Bitcoin. But then you look over at MicroStrategy, then it's probably going to have a $210,000 average cost at that point. And then if it corrects to $199,000, collectively, he didn't make anybody any money. This is what happens over and over again.
Well, to that point, it's like NVDU and NVDL, same thing. When you have that new product issuance type that happens, within 6 months, you get some kind of lag. And now, as James, and Eric, the proliferation of crypto ETFs is ballooning now. But Noelle, I think you raised a really good point. Like, Bitcoin didn't really do that bad at all today.
Yeah, exactly. And especially given the uncertainty that we're seeing ratchet up. I mean, we touched earlier, but I think probably off screen, on what happened with Colombia over the weekend with the threat of tariffs and then the capitulation of President Petro. And now, of course, Trump thinks that this is a new weapon he has, and it has an impact on not just currencies, but Colombia's largest export to the United States is crude oil. So this is ratcheted up uncertainty, and when markets are priced for perfection, which arguably they were towards the end of last week, especially after the S&P 500 delivered its strongest post-inauguration week since 1985, any kind of ratchet up in uncertainty is generally not very good news for risk assets. However, it is good news for safe haven assets, especially if the potential solution to the uncertainty is greater liquidity.
So apparently the whole Colombia tariffs thing lasted, I think, less than 20 minutes.
Yes.
Yeah. That Trump was actually, if you saw it, Trump was actually on the golf course, and he was told that they wouldn't accept the flight, and then he authorized the tweet to go out, and 2 holes later, Colombia basically capitulated and let the flight of deportees land in Bogota. So it didn't take very long. I don't understand what Colombia was trying to do. I mean, if you're going to do something like that, you have to have some kind of leverage or some kind of negotiating point. And to just say to the United States, no, you can't land that plane with our citizens on that plane. I knew this wasn't going to last long. The president of Colombia had no leverage in this
amateur
situation.
leadership, isn't it?
Yeah.
Right.
The spin that he's trying to put on it, the president of Colombia, is that he was not happy with the way his citizens were being treated on the U.S. planes, so he was going to send his plane to make sure they are treated better.
Well, he had an investigative journalist getting a real-time Zoom feed on it.
It's not credible. That's the spin he's trying to put on it.
Right, exactly. Yeah. You could have had him off the plane in 10 minutes if you would have let it land.
Yes.
It's incredible. Like, this is a mixing work and play. Like, Trump is at the golf course and he does a tweet. Tweets are as powerful as executive orders in the age of social media now. When he does a tweet, he mentions Truth Social. I bet you he has that in his contract. He's got to pump Truth Social whenever he does a tweet. But I mean, I think a lot of American presidents are looking back and saying, gee, I didn't know the executive had this power and what I could have done had I been more forceful or in applying effort towards a goal. Now, whatever people's political views are, like, he got these hostages released in the last, just a couple of days on his inauguration day. That is a symbolic timing. his speech invoked themes of putting people to Mars and space and robotics and AI. I mean, I think the velocity of his action since the inauguration has been tremendous. I mean, as you can look at the last couple of months compared to like years of even like the prior administration. I'm just trying to be politically neutral, but like what they passed, I guess the Biden, they got the student loan debt relief, which is contested. Like what was accomplished? I don't know. CHIPS Act, which we didn't need, is probably gonna get repealed. IRA, which is getting pulled back now. Like what got done?
Right. And if you also look at his nominees, he's, it's still early. We still haven't had Tulsi Gabbard go through. We still haven't RFK go through. But he's on a roll that 2 months ago, people looked at Pete Hegseth as defense secretary and, Pam Bondi as attorney general and, even Scott Bessent potentially as treasury secretary, that these were going to be tough to get through. And he's just steamrolling all these through. And it just goes to show the political capital and the power that he has, at least right now, that, he's getting all of his nominees. And I haven't seen it, but I always remember every other administration, there's always a nominee or two or three that kind of just, don't quite make it over the finish line. Now, I know he had, Matt Gaetz originally as the attorney general, and he got rid of him after a week later, and he got Pam Bondi, which some people argued really wasn't much of a difference between the two of them.
How's Matt's way to get out of it, though, right? That I don't know if they got rid of Matt or Matt probably called Trump and said, hey, can you nominate me and I'll bow out? I just got to not want this report released by the House Ethics Committee.
Right. But if you go back to around Thanksgiving, there was talk that he could have like up to 6 nominees fail, and now it's likely first of all, it's not going to be 6 because a couple of them got through. There's a path where all of them get through, and it just shows you the political capital that he has right now.
Only Tulsi's at risk, but on Hegseth, to your point. Only 2 nominees have come down to a 50-50 split Senate where the vice president had to step in. The last one was Betsy DeVos, Department of Education, under the Biden admin. Hegseth was most recent. By the way, looking back in hindsight, like Betsy DeVos really came down 50-50? Really that controversial? Really?
But also extending what you were saying, Jim, and also carrying on with that, Ram, this approach to the nominees is why I'm bullish on both crypto and AI for this year, because Trump is about winning. He and David Sachs are going to do what they have to do to win at that. They're not going to let DeepSeek derail the development of AI, and they are going to make sure that crypto is not only benefiting from regulation clarity, but also investment support. So it's this approach. It's different. It's refreshing. It's terrifying as well. And it does add uncertainty, but it also enhances the chances of winning in the sectors that are going to be so important for American innovation and financial evolution going forward.
Yeah, I mean, I think at the end of the day, for better and for worse, like he's going to do mostly what he wants to do and how he wants to do it. There probably was a more delicate way to handle the stuff that happened with Colombia, but that's just not how he's going to do it. And
the words delicate and Trump don't go together.
Exactly. It's not going to happen.
There are surprises. Like, for example, he's threatening layering on sanctions on Russia. That wasn't on many people's bingo card. That he's more critical in terms of posture on Russia than the Biden admin was. And so I think it's quite interesting. Apparently, Denmark had a call. They were apoplectic around how the Trump phone call around Greenland played out. I mean,
that's actually hilarious. I mean, Trump is saying, "Yeah,
is it?" As a non-American, I want to get your perspective. Is that hilarious?
But also, Denmark are increasing their defenses around Greenland, and Trump says, "Yeah, what? A couple of extra dog sleds?"
Denmark has the National Guard of the United States is bigger than Greenland, and they could take this out. Denmark has nothing.
It is astonishing, but it comes down to, uncertainty. We're in totally new times. This is not generally great for risk assets unless you think that they will do whatever it takes to win. And I do think that. But we have, by the time this podcast comes out, we might have had the FOMC statement, depending on when it's out. But again, while nobody expects there to be a move on rates, what we don't know is what Trump will say about whatever ends up happening. We haven't been in this kind of scenario before. And is this going to start impacting directly monetary policy or our interpretation of monetary policy?
It's funny because pivoting to monetary policy, Jay Powell has for years been talking about that the economy is broadly normalizing, that it's returning to a pre-pandemic level. And I've been a big critic of that statement. He's made it over and over again for the last several years. Actually, what is abnormal about the current economy? Why do you think we're going to go back to the previous cycle? We're in a new cycle. A new cycle doesn't mean it's worse. It means it's different. Quit waiting for the old cycle. Well, it turns out that Jay might be right in one respect, that we're going to go back to a pre-2020 cycle. Is he's not going to cut rates and Trump's going to rip them on social media. So we finally made it back, at least in that respect, on cycle.
It's funny. I mean, Powell was a Trump appointee.
Yep.
Yeah.
But Trump on Friday, there's like a Friday Night Massacre, which is not really getting much media attention, but he gutted the IGs, the inspector generals of many departments who have the responsibility of watching for cost overrun, supervision, and different kind of abuses, which probably is a good move by them, because clearly they haven't done their job if you're seeing the Pentagon lose $1 trillion over the last decade. So, but yeah, I agree, Jim. Like this battle between Trump in the public and Powell, I mean, if you're the Fed, you can't help but let that influence you. Because even if you believe in the independence of the Fed, if you want to preserve the independence of the Fed, then you might want to be influenced by the president so that you can preserve the independence of the Fed.
Some of it, though, for the Fed is a bit of an own goal, too. Trump could come out and be completely accurate by saying, in the election, you cut 50, which was supposedly designed to help my opponent, although you could argue it didn't, because not only did he win, but that long-term interest rates rose right after he started raising rates. That wasn't in the bingo card of what was supposed to be the reaction. And then he raised rates again in November, and then he raised rates again in December. And then as soon as January 20th comes, you stop raising rates. Now, I could give you a bunch of economists who give you rational reasons why that happened. But the fact of the matter is, cut rates. I said it backwards, cut rates. But the rational thing is you were cutting until the second I became president. And then you stopped cutting rates at that point. So Trump could point that out, and he has, and he is, in terms of the policy that the Fed is doing. So it's a bit of an own goal here. You started 50 basis points, you being the Fed, in September, when it was really not clear that you needed to do 50 at that point. And so now you're going to reap what you sowed with this policy.
It's a great point on the box the Fed put themselves in. By the way, Trump complimented the Fed last year for not cutting rates prior to September. In fact, he asked the Fed, "Hey, don't cut rates now," because he didn't want them to interfere. But look, Trump is really focused on what Trump wants to do, which is lower rates and usher in the golden age. Now, the rate that really matters, of course, is the long end of the curve, not the short end. It's going the wrong way, Jim, as you pointed out. It's up like 100 bips. We haven't seen that in any easing cycle. And the only way you can lower the long end of the curve is something called quantitative easing, which neither Powell nor Kevin Warsh, a potential successor to Powell, would support, nor Besant.
Nor should they, because there's a risk. Quantitative easing and zero interest rates from 2010 to 2020 worked because no matter how hard you pushed, you could never get inflation above 2%. Now, no matter how hard you push, you can't get it below 2.5%. And in the case of core inflation on CPI, you can't get it below 3%. So I've been an advocate or an arguing that the reason that you've seen the Fed cut rates and long rates go up 100 basis points is the market's got this latent fear that you're not stimulating the economy. It doesn't need it. You're just raising inflation expectations. And we've seen that in the University of Michigan survey, and we've seen some widening in the TIPS break-even spreads, the market measure of inflation expectations. So if the answer is, oh, we got to do QE and we got to cut rates even more aggressively, great. You're going to put 6% on the 10-year is all you're going to wind up doing if you're not careful, because the market will interpret that as just being more inflation, not necessarily being a stimulative towards faster growth.
It'll be interesting. Like the economic surprise index is turning up now. It's just something like I think we're on the later side of this, of where the 10 years. But what about on the inflation side? I don't know if you looked at Jim or anyone else here, really the shelter component of CPI, like the rental inflation component, which is a faster real-time measure, is coming down. And Powell said he does pay attention to that. So this is all very good. This is all very good, right? Disinflation is back on the shelter. On labor, it'll take time for immigration to have like a tightening effect on the labor supply. So good.
The one thing you got to be careful of, you're right. The shelter numbers are down to like 0.3. I'm talking about CPI now like 0.3 a month. So it's like a 3.5% inflation rate. It's still higher than the overall level of inflation. It's the lowest it's been in 3 years. But if you look at the market measures, like the Zillow and the apartment.com measures and stuff, rents have bottomed. They've bottomed and they might be starting up. So shelter's coming down. It is a lagged indicator. It's still too high. And the forward-looking measures are saying we might not have much more declines. Now, I'm not saying it's going to go up, but it's not going to get to a point where it would be conducive to get the entire inflation measure down to 2 or under for a sustained period of time.
I'm 100% with Jim here on this, because I think like you have like the boom towns during COVID, you know, the states, if you're looking at really Florida and Texas are like the poster childs for this. And they're the ones that are seeing the huge decreases in home valuations and rents and you name it. But like you look in the Northeast, like it's completely supply demand. I don't think no matter what the Fed does, essentially, like you're not going to solve the inflation from housing more than you already have, as far as I'm concerned, for the most part. I mean, there's sort of a dislocation right now between buying and renting because rates are so high and all of that. But like for the most part, this is more like a structural issue, I think, in rents and housing than it is for many other areas of the economy.
To give you a fun statistic about the structural issue and how this has changed, the majority of the people in this country live in the Northeast and the Midwest. 85% of new housing construction takes place in the South and the West. The Phoenix real estate market alone is larger than the New York City real estate market. Trades more value gross per month trades in the Phoenix market because everybody's retiring and moving to Phoenix. No one is rushing to come to New York City or Chicago or Boston or Philadelphia. Other populations are shrinking. So we have a housing problem. We have high rents. What's the answer? Oh, Hovanian's going to start another project in Austin, Texas. Well, that's not going to help New York City or Boston. And that seems to be, and nor do they want to come up and try and start building in these markets. They're highly regulated and they're very, difficult to get zoning. And so it's much easier to go down into Texas or to go down into Arizona where everybody wants to move because that's the migration pattern in the country, although most people still live in the Midwest and in the Northeast.
But bring this back to markets, and we have obviously some big economic data drops this week, including inflation. What is going to move sentiment more? The fallout from DeepSeek or actual economic signs of disinflation and economic growth? In other words, are we focused on the animal spirits hit from the valuations, or are we focused on the animal spirits boost from strong economy?
DeepSeek is mostly behind us now. Everyone had all weekend to think about it. You had a lot of panic selling today. I think it's going to recede. I don't think that's the right focus. It's an event. It's about a story about a startup in China. It has more to do with OpenAI near term and the promise longer term about edge AI like we discussed. But it's not going to change earnings for NVIDIA when they report. It's not going to change your earnings from Meta. So I think you'll have some waning discussion on it, but it's going to go into the background now.
And what would this do? What would this do to the valuation of Trump coin, for instance?
No answer. Not going there.
The easiest thing in the world with Trump coin, with all the meme coins, is to disparage the meme coins. So I'll play devil's advocate for a second, and I'll say something nice about meme coins. They have the potential to be a very powerful economic tool, have the potential. You have the coin come out and you have its admission schedule, but nothing stops you once a coin like the Trump coin comes out that you can offer certain incentives. Hey, if you own so many coins, I'll do an AMA on Truth Social and you could come and ask the President of the United States any question you want. Oh, it's open. The rest of us can watch it, but we can't ask a question. The Trump Organization will be a founding sponsor of the 250th anniversary of the Declaration of Independence, July 4th, 2026. If you have so many coins, you can get, discounts on tickets or merch. Maybe the Trump Organization will be a sponsor of the 28 Olympics. You can get discounts on, so you can offer all these kind of incentives. And what I'm trying to say is, imagine if Disney were to bring out a meme coin, or imagine if the airlines were to bring out a meme coin as a way to supplement or even replace their airline mileage programs. These could be very powerful types of programs to use instead of what we do now with these meme coins is just raw speculation. So I get it that we don't like the raw speculation about these things that have no value. But if we stop disparaging them, we can say, there is something there that we could do that could be quite useful. And Trump could too, if he wanted to with his coin. But as long as everybody wants to hype it, I guess he has no incentive right now to think that way.
The way I kind of think about it is it's like distilled pure like speculation, or I guess kind of hope on something that you're talking about, Jim. It kind of like if you look at DJT, the Trump media company, that stock is it's valued at it's almost $7 billion in valuation. The thing has $2 million in revenue. I mean, it's like there's some business in there that's worth something. And then there's like all this other stuff that's baked into that stock price, and that's kind of what these meme coins are in some ways, or celeb coins if you want to call them that. So I did not come up with that. So I think it might have been little that I first heard like coming up with that analogy, and it like really clicked with me. That's kind of the way I'm thinking about this sort of thing. It's like pure unadulterated speculation, attention economy type stuff. And I will say, like, I probably sound like a boomer, but I just don't care about this stuff, to be precise. And like, if we're talking about the Trump coin, the more I've thought about it, the more I think it's a net negative. I think there's some positive things that could come out of it. I think it really tested the Solana system. It probably onboarded some users, but the data that I'm seeing out looks like it really, anyone who knew came to using blockchain and Solana, they didn't stick around or do anything else. They just bought the meme coin and then got burned. So I mean, the fact that he has 80% and could theoretically dump, like hopefully that doesn't happen, but like I don't know. I just think the whole thing, it's just giving ammunition to the other side, the Elizabeth Warren anti-crypto army. I can see her just talking about this in a congressional hearing at some point in the next few months.
She's not relevant now, though. She's not going to talk about any hearings. She's not going to set the agenda, right? I mean,
she'll be able to bring it up, and mainstream media will click on it, and it's not going to matter in the grand scheme of things. It's just more ammunition for.
She's already walking back her anti-crypto commentary back into like the debate of last year, and the Democratic Party now knows the consequence of attacking crypto because Fair Shake PAC won nearly every single candidate they fielded. So they were whipsawed, and I think will be burned once, twice shy.
Yeah, and midterms are coming up fast. But staying with the meme coins for a second, James, I have a question for you. There is a Doge ETF filing on the table. What odds do you give that?
I do not have odds on that. There's way more than Doge. I mean, we have Doge, we have a 2x Melania coin filing drop.
I did not see that.
Right before we said that, so Tuttle Capital filed for 2x XRP, Solana, Trump, Litecoin, Melania.
That's not good for crypto.
Bonk, BNP, Cardano, Chainlink, Polkadot. We have Doge filings. We have multiple Bonk filings. I mean, these really what this comes down to is it's issuers pushing the limit of how far Hester Peirce's, crypto council is going to let things go. Like the SEC is going to decide like where the line in the sand is. Personally, I hope it's I never thought I'd say this, but I hope it's a little closer to Gensler than these filings, if I'm being completely honest. But yes, they'll determine where that is. There are some unique filings we can get into in a bit, but yeah, I wouldn't be surprised if we do get a meme coin ETF, maybe not necessarily to start 2x, but who knows what's out there. But
you should get Doge. Doge is definitely a commodity
blue chip. The blue chip.
Right, but like the SEC is not a merit regulator, right? So the SEC shouldn't be trying to call balls and strikes around that anyway.
It's about markets. It's market structure, right? Market structure. Can the NAV stick to the ETF price?
It's more than that. Also, it's disclosure too. Go ahead, Jim. Sorry.
Yeah, I was going to say, not only that, you can also find market limits. I think one of the things that crushed the Trump coin was, when it was flying high, approaching $70 at point. Now it's like trading around 25. Was when the Melania coin came out. Yep. Because everybody kept saying, well, see, with the great thing about meme coins is the supply is fixed. No, well, it is fixed in that there's only 1 billion Trump coins, but now we're going to get 1 billion Melania coins. There's a Barron coin to follow, a Trump Don Jr. coin, and a Mar-a-Lago coin, and we're just going to keep going and going and going. And that's where I think it was such a bad reaction to the Melania coin. Same thing now with all these ETF filings, James. All right, let's assume that they go full Hester Pierce. They're all approved, and half of them just die in the crib and they don't do anything. The market narrative could turn to say, see, there's a limit to how far we can go with crypto, that it's not this unlimited Michael Saylor 13 million in 20 years, that there is an upper limit because these things die as soon as they come out. At least if they deny them, you could always promise that, if they only would have let these go through, there'd be all this demand and stuff like that.
It's the whole theory of like, you're better off not. You don't want revenue. You don't worry about profit. You have a story to sell. That's better than profit from Silicon Valley. Yeah, it's how true that was. It's kind of I guess the same way.
I think that's spot on. What ends bull markets is when people get burned in the IPO market, which is usually when the last phase of this stuff. So I don't think it's less about the narrative around the utility things. It's very simply put, if people buy it and they get burned, they're not buying it. And then that rolls back up the hill to the issuers and to the ecosystem. And that is the issue with this proliferation of ETFs that aren't going to really make people money. That's a problem.
I would also say the way this is going to play out, even if all of these get approved, the market will decide if there's any demand for these products, right? Like I hear all the time people talking about there's going to be no demand for these single stock ETFs. So we thought there would be. Same with these buffered defined outcome ETFs. People are destroying the Calamos 100% protection product. People, for whatever reason, like to use them in their portfolios, and if people find utility in using these things, they're gonna buy them. But what happens in like any other ecosystem, even if you look at just commodity ETFs or precious metals as an example, like we have palladium, we have platinum, you have nickel, you can invest in silver, like you can get exposure to all these things, but still 90% of the assets are in gold. Like that's probably something along the lines that's going to have here. You're going to have most of the money in the ETP realm in Bitcoin. And then who knows what else is going to come due, or who's going to get assets, whether it be Ethereum, Solana, XRP, some of these other things. But a lot of these long tails, they might just become small trading vehicles. And if they get $70 million, $100 million in assets and they're charging enough, it could be profitable for the guys that are issuing them. It's just that they're not going to become big hyper things that are going to attract billions of dollars in the way that the Bitcoin and Ethereum ETFs have.
Yeah, Wall Street will get paid. That's what that means when you say the issuers will make money. Of course, the toll gates will get paid. The opportunity is really on a Circle IPO, a Chainalysis IPO,
Kraken,
a Falcon X IPO. That's where people should be focused on, and the other would be on the banks. And Trump at Davos also said, "Hey, look, J.P. Morgan and Bank of America, you're not banking conservatives." I think that was a nod to Nick Carter's Operation Choke Point 2.0, and we're going to see enablement of banks to custody crypto. That's a big win. Those are the most exciting opportunities to be focused on. But those are long-term projects.
Trivia question for you: How many bank charters have been approved? New bank charters have been approved since the financial crisis.
14 to 13.
0.
How about Live Oak Bank 2008? I guess that was. So where you put the divider line?
Since Dodd-Frank, it's been 0, and the Fed and the regulators have had a unstated policy that they don't want new. If that logjam breaks, and you've talked about them unbanking conservatives and not allowing crypto, the natural response to that is a new bank charter to let it happen.
There are special purpose national banks like Anchorage that have been issued. However, not enough, and only under the leadership of Brian Brooks, who's the former chief legal officer of Coinbase, which is incredible. They got the fox in the henhouse, but that's like the way it's supposed to be. Like the fox should be ruling the roost, if that makes any sense.
Approved by the Federal Reserve so that you have access to the Fed master account.
Correct. Like Custodia has been denied. Yes.
Right. Custodia is probably the poster child of this. It's not only that Custodia has been denied, but that you go back 10 years ago, there was a thing called Nubank that was trying to do exactly this. They won't let anybody in. And, the answer to the problem with conservatives, or Melania herself got debanked, and Barron almost got debanked. The answer is to, approve charters to let people that want to market to those businesses.
100%. And to that point, I'll give you a quick trivia right back, Jim. So how many bank charters were out there 20 years ago or 15 years ago versus
I think
now?
it was like 15,000 or something like that.
Right. And now we're around 4,200. So by the way, back 25 years ago, you'd have a couple dozen bank failures in a year, generally small community banks that got over their skis, but you also had more innovation that was taking place. And the pendulum's gone too far. There's no reason why Amazon, which owns Whole Foods, shouldn't have ATMs and a branch in their facility. That should happen. There's no reason why Google shouldn't have payment rails that compete with Visa, MasterCard that charge 3% when they have millions of merchants on their platform and millions of consumers on their platform. And it's illegal. That's correct. It's illegal under the Bank Holding Company Act. That regulation needs to change, and people aren't focused on that. They should.
I'm nodding here because I'm based in Europe, and of course the banking scene is very, very different here. And we're a much more bank-dependent economy, not just for personal finance, but also for corporate innovation. But
and the your stock markets.
Exactly. And one of what you were saying, Ram, reminded me of debates that I've had over the years about tech protection here in Europe. And it's relevant because what you're talking about, what you're sketching out, is allowing tech companies to become banks effectively, but banks are not allowed to become tech companies. And this is going to be seen by many as unfair competition. Again, this is what we've been through here in Europe. It's going to be seen by unfair competition because the banks have higher compliance costs than the tech companies, and the tech companies have all the data, so they can easily outcompete the banks, and that's not going to benefit the ecosystem. However, for those of us in the crypto weeds, this is what we need. And this is one of the reasons crypto evolution has been evolving sort of in the shadows, probably faster in Europe than in the United States, but that's about to change, because we do know that depending on the existing very closed system of banks, especially when you can be debanked just not for even tweets, but for what your job is, you are a high risk individual. It's not the kind of freedom that the original designers thought of.
Well, I think the promise of opportunity is all-to-all competition, right? When you have zoning and you have licensing, those are actually barriers to entry that benefit the incumbents. That's what it's really about most of the time. And the tech companies don't actually want to be banks, because if you're a bank, the compliance burden it's like taking a bone saw to your fingers one at a time. It's awful. I used to be an executive at Cross River, and we would have a monthly board meeting, which is just around compliance. There's no strategy, no product innovation. You're reviewing loans, you're reviewing major customer accounts, new product review committee. Then you can prepare another package for your bank supervisor regulator, which is another board on top of the board. So you're swimming in PowerPoints and paper. And this is why the US banking system has a sclerotic feel to it, and it really needs innovation. But what the tech companies really want is a bank holding company subsidiary that can be more innovative. And they try to do these things with industrial loan charters, like Square has one. But yeah, I think all this banking regulations got to be revisited. You need stable coins to settle payments in real time. Why can't we move money 24/7? Why do we have to wait for ACH and wires, which are not moving as fast as stable coins?
Awful. Yeah. I mean, the one thing we should mention while we're talking about all this is the last week after our show, Hester, they had a closed door meeting on Thursday, and the next day she got rid of SAB 121 just like that. And SAB 121 prevented banks from, getting involved at all. They couldn't it functionally made it illegal to hold anything, to do anything crypto, particularly custody. And so it needs to happen, but it kind of is starting to happen already. Like a lot of these banks have said they want to do this, and they were stopped by the last administration from doing it. They were stopped from getting involved. and it was functionally made illegal, and that's already underway. It's already changing. Or we're going to see, we're months from now, maybe even sooner, we'll see these changes and how they take hold. But like, for example, we had BlackRock file for the ability to do in-kind transactions in ETFs, which, like, for anyone listening, they're like, I don't care. But what it basically means is, like, you can hand over Bitcoin and get shares of the ETF, or vice versa, hand over shares of the ETF and get Bitcoin. And you think, like, well, isn't that how an ETF works? But no, the way this model that I'm showing here is what in-kind looks like. You can see there's a bunch of lines, there's a bunch of people involved in this process, but there's way more lines and way more people involved in the cash process because they couldn't let the brokers and the banks, they didn't want people touching actual Bitcoin. So you had to go around and do all these added steps with cash. And like, at the end of the day, the really liquid stuff like iShares is iBit and the Grayscale product, like, they are traded enough that they're pretty liquid. But some of these other products that are further down, they don't trade as much. They're going to see a huge benefit in their spreads, their trading spreads, and the efficiency of doing these creation redemptions, just because SAB 121 is gone probably. So this was filed on Friday after market close, and right after SAB 121 was gone. I'm assuming that's not a coincidence. And so we'll know within the next few months if the SEC under Ueda and Paris is going to let this thing go through, and we can have in-kind transactions, which in my view should have been there from the get-go. But again, you had Gensler and Warren and the Biden administration that basically didn't want banks or anyone in the TradFi world really touching Bitcoin itself. So they didn't allow in-kind create redeems. I don't know if anyone has any thoughts on that.
I have a question for Jim, actually, pulling on what you were saying, James. Jim, do you think we'll see big American banks using stablecoins in the next couple of years?
I would hope so. I think where stablecoins are going to probably catch their mojo is going to be, in some kind of international and foreign transactions. There was a famous image, wasn't quite a meme, going around 21, 22. It was a picture of a Western Union telegraph transfer where somebody would send $300 and it would cost you $9. So it was something like 1.5%. And back in 1870, when you went to send money to somebody, it was actually, they put $300 in a saddlebag and somebody had to ride a horse up to give you $300. Today, an international transaction, 150 years later, it's 1.5%. It's exactly the same price. There's been no innovation. There's been no cutting of the cost. Stablecoins can really step up and for international transfers and for money transfers of those types, and could really reduce the cost down to practically nothing. And I think that is, as James pointed out, if there's been anything that's come out of DeFi, it's definitely been stablecoins. If you're going to put an ecosystem around that of trading and of banking and of lending and of borrowing, it's going to be around stablecoins. But that is an existential threat to the current banking system. And that's really where the Fed steps up. That's why I said, why has the Fed approved no charters since Dodd-Frank? Because ultimately, at the end of the day, they're protecting the existing incumbents, and they like the system we have. And Ron, one statistic for you, about 10 years ago, Jamie Dimon, and I assume it's true, it's probably greater now, he pointed out that in the post-Dodd-Frank era, that JP Morgan makes office space for over 1,000 1,000 regulators who go to a JP Morgan office, and it's a full-time job is to regulate JP Morgan. 1,000 people.
We did the same at Cross River. We had dedicated space too. The regulators, they'd come in and hang out and they get lunch. I mean, that's
drink your coffee.
Banks are quasi-public institution because of the FDIC deposit insurance relationship and the fact that the U.S. taxpayer may be on the hook. Actually, I don't object to that. I think that's fine. Like, you need supervision if public tax money is on the hook, but you got to find an appropriate balance between innovation and overreaching supervision. Why not let Dynamo? By the way, what I'd really love to see isn't so much the Amazons getting into banking and Google into payments, although that would be innovative. What I'd love to see is entrepreneurs getting into banking. That's how most community banks actually started, in serving their local community. And those local communities are now virtual communities. Let's make that happen.
It's not just digital assets. Also, to be clear, that like the banking regulators don't like fintech. Think like 10 years ago, before people were really talking about. They don't like anything related to this. They're not fit. it's just a general dislike of the entire ecosystem, I would say.
I remember the initial pushback against things like Venmo. They thought it was the Antichrist for a while there.
Right.
And if you go back in the history of the Federal Reserve, you go back to the, because we were looking at this a couple of years ago in the mid 1970s, the Federal Reserve published position papers. They were against the creation of the money market fund. They thought that was a bad idea too. They are very insular to any kind of change within the strict lending and borrowing facilities of what a bank does.
But at the same time, we're seeing that innovation in finance is going to be inevitable and probably more likely now than it would have been even just a year ago. And yes, this does, tying in what you've all been saying, this does produce some threats to the existing model of traditional banking. So at the same time, the regulators are going to want them to find other sources of revenue, such as handling crypto, such as somehow finding a way to handle stablecoins themselves, so it's not the threat that it could otherwise be. We could be looking at crypto becoming part of banking, which is ironic, but also interesting and somewhat exciting if it ends up distributing opportunity and making finance more efficient.
Look, we need to introduce competition because JP Morgan is a monopoly, but I own JP Morgan because it's a monopoly. The banking sector is very well positioned. They really don't face any credible threat from crypto. UBS just hit all-time highs today. I think 25 to 30% of my equity portfolio is in financials. At the same time, I hope you get the innovation. We need that. By the way, I'm really glad to hear that the regulators and bank supervisors were in JP Morgan's office to the tune of 1,000 because they're not going to work. Did you hear about this? They spent half the day at work. The unions have negotiated that they don't have to go to work. So I'm glad someone's doing something there.
Well, that was pre-COVID. So I don't know if they're still doing it, if they're doing it virtually or not right now.
All right. I have one last topic that we've kind of already discussed. All right, let's get into real quick the SBR versus digital asset stockpile. I mean, Noelle said before, like it's kind of at this point they said 180 days we'll come back. Like David Sachs's board, or I don't know exactly what term they use. I forget. Was going to come back and with suggestions. I guess one of the big things we talked about, DeepSeek, obviously we talked about Colombia. The other huge thing that was going on Twitter the last few days is basically Bitcoin maxis really going after the XRP army and Ripple and some of this other stuff. It seems to be, from my point of view, that a lot of crypto is kind of like it should just be Bitcoin or nothing. Obviously, that's not everyone's point of view. I will say I'm kind of like at the point where like I'd rather just no reserve. Like I can't imagine like the government going out and buying like something like Ripple or XRP, I should say, Ethereum, Solana, where like people created this stuff. They have foundations that hold hundreds of millions of dollars, billions of dollars worth of this stuff, and then you're also going to have the government buy it. Like it just, I don't know, the incentives, I just really don't like it. So I'm personally of the opinion that like if they're going to do this, it should just be whatever they hold. Currently, I have the screen up here. This is from Alex Thorne, which the source is Arkham and Galaxy, obviously. Showing off that most of this is Bitcoin already that the government holds. I'm curious what your guys' thoughts are. Do you think it's a good idea to have the government going out there and potentially buying, I don't know, XRP, Solana, ETH, things like that? What are your thoughts?
I'm against it. Nick Carter wrote a good op-ed about why he's against any kind of a Bitcoin reserve. I'm against any kind of crypto reserve. I don't think it's a good idea. I also think politically, it could be a very dangerous or politically a toxic idea. It's one thing to say that the government has acquired all of these reserves, and these are through Justice Department investigations that they've got all these coins, and they can just announce that they're not going to sell it. That's one thing. But the other thing is if they're going to actively do the Loomis bill and try and acquire 1 million Bitcoin, it means they're going to have to issue debt. They're going to have to issue debt, and they're going to have to pay interest rates on it in order to buy Bitcoin. And for a lot of people in this country, that is not going to sit well with them, especially given the volatility of Bitcoin. At some point in the future, you probably could say it's going to be sitting at a loss relative to where they bought it. And then they're going to have to explain why the regular taxpayer has to pay interest on the cost of the government owning a security that is speculative as a crypto and is sitting at a loss. So I don't think it's such a good idea that you want to get the government involved. And the final thing is, it always comes with strings attached. Yes, I understand it's the blockchain, and yes, I understand it's decentralized, and they can't touch that. But they could do things on the ownership side of who's allowed to own it, how you're allowed to own it, as opposed to on the on the supply side as well. And every industry that I've ever looked at, including my own, the financial services industry, has regretted allowing the government into their business. And that's what you're doing with a Bitcoin strategic reserve or a general crypto strategic reserve.
I agree with everything Jim said, definitely. I think the idea doesn't make any sense, but I also think it's not going to get very far, because can you imagine Senator Lummis trying to explain Bitcoin to every single member of Congress to get their support for this? I just don't see it happening.
I would say, before Ram even jumps in, I would say, like, one, honestly, if it gets through Congress, so be it. Like, that's a different situation. Like, I'm with you guys. I don't think it needs to happen. I particularly don't think we should be buying other assets other than Bitcoin. Like, that's like having somebody buy, like the government buy a bunch of stock of some company, in my mind, in many different ways. But the one thing I would say on Jim's comment, like the way that Lummis's bill is set up is basically she's going to use the balance sheet and revalue the gold at current valuations to use that to ultimately, it's just balance sheet tricks to go out and acquire the Bitcoin.
Oh, and the profits that the Federal Reserve pays to Treasury, of which there are none.
Just real quick on that, there's 8,000 tons of gold that the United States owns, and it's valued at $42. Now, if you want to take that 8,000 tons and you want to value it up at around 25 or 2,600 or whatever the gold price is today, that's going to add an asset of somewhere between $800 billion and $1 trillion.
Yep, that's correct.
How about just do that and help reduce the debt to GDP in the United States and bring down that issue, as opposed to, now that we've got some extra money, this is like playing with the house's money in Vegas, is the way a lot of people are going to look at it if you do that.
Agree.
I think briefly, the most likely outcome is that the U.S. adopts a HODL policy with existing coins, and that'll likely continue to be the case. What's missing, we need to learn more about 100 days from now, is what's the case, right? What's the role of this reserve in a broader strategy, right? For example, are we talking about moneyness? Are we talking about what are appropriate foreign exchange reserves to the Federal Reserve? That's not yet part of the conversation. We're jumping to the tool before we get to the problem that we're looking to solve, and there are problems to solve, but that argument has been advanced. I don't think it makes sense for like ETH, Sol, and all these other tokens. So if you're going to do it for anyone, I think the asset that has the closest probability of having some quality like moneyness would be Bitcoin. That's how I look at it.
Good point.
Keep in mind that, the last time that came up was in the late 1990s, was about the idea of the government or Social Security trust fund acquiring equities. And that's, various forms. And then it came up again, right before the financial crisis, about them potentially buying ETFs. It always comes up at a high, by the way.
It does. Social Security privatization in the late 90s. By the way, it would have been a good idea. A Canadian pension plan invests in a broad set of asset class. Canadian pension plan, and Jim knows this, our audience might not, but they are the equivalent of the Social Security trust fund for Canada.
And they shoot the lights out too. They perform really well for the most part over their history.
Well. Yeah, and they beat the United States because the United States can only invest in bonds. It's using Peter to pay Paul. The Social Security trust fund is a liability of it contains assets, and the assets of the Social Security trust fund are liabilities of the U.S. government called bonds. At the house level, they net out. How do you have an asset in one pocket which is a liability of another pocket?
I agree. They couldn't get equities through, even though that's probably a cleaner use case to say that. And of course, they didn't get equities through because they always come up with the stumbling block of voting the proxies. If the federal government owns X percentage of some company, and now they get to vote the proxy, do you really want Congress deciding on that and dictating rules to the board as to what they need to do to get a yes on the proxy? That's not a good idea.
Japan made peace with it. In Chile, they privatized their version of Social Security in the late 1970s. Everyone essentially had a stake in the economy, and it worked out very well there, actually. But you have to have a multi-decade horizon, which essentially you have in place with these defined contribution plans anyway. Like, we have a framework out there. It's just the funding the transition cost when you put money in? How do you pay for your current expenses?
All right. We went a little long today, but that you heard, I wish somebody disagreed. I wish somebody was on here arguing why we should have it. But I think the general consensus, like, yeah.
Short-term number go up. I need 250 before December.
I will qualify and say, if it is anything, Bitcoin makes the most sense. But even then, I don't think the U.S. doesn't need it. Maybe some smaller country with having a bunch of other issues, it might make sense to potentially take a shot on adding Bitcoin as a reserve asset. But yeah, those are my final thoughts. Maybe some of our other guests will have different views. I'm sure this will come up again and again over the coming months. But all right, I'll wrap up now. Thanks for joining us for this episode of Bits and Bips. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone.